Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. We've always got a bunch to talk about with the market, stocks, crypto, but most importantly, what's on your mind. So if you have a question, leave your ticker symbol and question in the comments, and we will go over it live during the show. We'll look at the technical structure, we'll look at the financial structure, fundamentals, whatever it is you want to look at and talk about. That's what this show is all about. Now, I give my normal opening monologue. We dive into stocks or your questions, whatever you want to do. This show is totally for you, and it's why I do it, to help everyone reach financial freedom. So if that's what you're looking for, you have come to the right place. So while you gather your questions, I'll just dive right into it. But let me start by saying, with this market rallying one day, red the next, rallying red, wouldn't it be great to know what the top 10 stocks are in categories like value, growth, dividend, and momentum? Well, that's what we've put together. We have uploaded our top 10 stocks list for each of those four categories. That's 40 high quality stocks ready to choose from that are constantly updated. I mean, constantly updated. As the market evolves, so does our top 10 lists. Click the first link in the description to become a member and get instant access to our top 10 value, growth, dividend, and momentum stocks, and so much more. We've done the research so you don't have to. All right, my opening monologue. Stocks did trade higher today, but first, the session did start on a softer note as buyers held off any conviction until after Federal Chair Jay Powell in his Senate confirmation hearing, in which he strengthened the case for tightening the time frame or tightening the tame of inflation, right? But it did not provide investors with any unexpected changes in policy. Meanwhile, the U.S. inflation rate report that's due out tomorrow is likely to show that inflationary pressures persisted at the end of the year. I mean, we all know it. We don't need a report to tell us. When we go to the store, everything costs more. That's inflation. The Dow Jones today added as much as 180 points after falling more than 250 points earlier in the session. The S&P 500, it rose 0.9%. Both of those indexes snapped a 4-day losing streak. Meanwhile, the Russell 2000 rose 1.1%. In the tech-heavy NASDAQ, it extended previous session gains and jumped 1.4% as investors are buying the tech stocks dip. Yeah, there was a buy the dip movement in the market today. The S&P 500 information technology sector jumped 1.2%. It led the mark higher with a retracement in yields, but it was outdone by 3% gains in the energy sector, up 3.4%. Energy stocks followed oil prices. Oil prices were up 3.9% today to 81.14 a barrel. Energy is going to outperform this year just like it did last year. So I hope you at least have an energy ETF in your portfolio. Now, utilities, they were down 0.9%, and real estate was down 0.2%, and consumer staples down 0.1%. Those were the sectors that closed the lowest, as their defensive characteristics, I should say, did not sit well with investors in this rebound-minded session. Yep, stocks rebounded today. Now, from a technical perspective, the ability of the S&P 500 to reclaim its 50-day moving average at 4678, that's what you see on your screen here. This is the S&P 500, and the candle all the way to the right, that is today's candle. Day before, green. And notice the wicks on these candles. There is no wick at the top of these candles. But there, yesterday, a huge wick to the bottom. We rebounded. Today, there was a wick at the bottom of this candle because earlier in the session this morning, there was red. But it came back. It bounced back. Stocks bounced back. And that's what has these candles in the S&P 500, no wicks on the top because they're closing at the very top of the candle, but they're bouncing from this bottom wick of the candle today and more so yesterday. But yesterday it closed right below its 50-day moving average. Today it closed above its 50-day moving average. And remember, it's with the 50-day moving average, it's bullish above, bearish below. A simple phrase that you can use in your investing. Now, today's kind of interesting with its close. It closed right at its 21-day moving average, 2 points above it. Today it closed at 47.13 and the 21-day moving average is 47.11. So just 2 points. Now, this is a good sign. We've seen another good development for buy the dip activity. Now, this key technical level has shown us to be a good buying opportunity since April of 2020. Whenever the S&P 500 gets to that 50-day moving average, since April of 2020, it has been a good buying opportunity. And I hope you took advantage of that. I did. And it's worked. If we look at the chart, look at this. We can go back. The blue line is the 50-day moving average. And we go all the way back to April of 2020, and you can see that blue line. There's been a few times where it's dipped below it. October of 2020, September of 2020, it's dipped below that blue 50-day moving average. But it rubber bands right back. And that's the market environment we have been in. That's why on Sunday's Catalyst Watch show, I mentioned that we are in an uptrend under pressure. And at that point on Friday, we had closed in the red, but right on that 50-day moving average. The uptrend has continued. It is not under pressure at the moment. Now, looking at individual stocks today, IBM dropping 1.6% was an exception in the tech sector after receiving a downgrade to sell from neutral at UBS. Illumina, they soared 15.6% after the company issued a 2022 revenue outlook that was above estimates. Also, ExxonMobil, it gained more than 4% today, tracking higher with oil prices rising. And CVS Health, well, it set a new 52-week high. I lost my train of thought there for a moment. A new 52-week high. And we're going to talk about CVS Health in greater detail in just a moment. But they rose their they're getting my words mixed up here. My thoughts are all jumbled. So much to talk about. But they raised their fiscal year 21 EPS guidance above estimates. So that helped them reach that 52-week high. And again, we're going to do a deep dive on CVS Health in just a moment. Okay, let's look at Bitcoin and Ethereum. Bitcoin was up 2% so far today, and Ethereum was up over 4.8%. BTC USD on TradingView. There is a link in the description for a free account to TradingView. There's also a link in the account for free crypto and free stocks from different organizations, and that does help out the channel. Now, yesterday, I'm going to hide the volume here for just a moment so we can see this a little bit better. But yesterday, we were talking about this all-important trend line and how Bitcoin has the candle has been closing and staying above this trend line. And every time Bitcoin has hit this trend line, it's always acted as a low and has reversed off of it. Now, Bitcoin today is at it's up 2.1%. It's at 42,710 right now, and the candle has moved up above this trend line. And the wick today did dip below the trend line, like it has for the past 5 days. But the candles themselves are staying above it. This is a very positive sign, in my opinion. Even though we are way below the 50-day moving average or below the 200-day moving average, and that's a very negative and bearish structure on the chart, it is a positive sign that we have hit this trend line, we have put on the brakes, and we could potentially be seeing a reversal, the beginning of a reversal. So if I look at this thing further out, as I scrunch this up, look back here. I know I pointed out all the time, July of 21, it got down to this trend line, and that acted as support. Let me open that up a little bit here so you can see it better. Now, it didn't sit down here on this trend line and consolidate along it. It hit this trend line and bounced and rallied immediately. So it does give me a little pause. It's acting different right now than it did here. But this was a turnaround area on that trend line. And then we can also go back here to October of 2020, where it also bounced off that bottom support line. So it is giving me at least some encouragement that maybe this is a turnaround area for Bitcoin. Now, Ethereum looks a little bit different. ETH/USD on TradingView. And, oh, I hit the wrong, I got the wrong chart there. All right, the chart with my lines. There we go. Ethereum is also hanging out on a trend line itself, and it's consolidating along that trend line. And both trend lines for Ethereum and Bitcoin are ascending. So if they're going to hang around and consolidate here, they're also going to have to start moving a little bit higher. All right. So there's Ethereum. It's at 32.33 right now, and it doesn't look like its wick broke through the trend line today like Bitcoin's did a little bit. It looks like the wick stopped right on that trend line, which is great. Now, yesterday, the wick did get down below the trend line, but it bounced right back up so beautifully. All right, so that's looking really good, and it gives me at least a positive outlook right now on both Bitcoin and Ethereum, bouncing off these trend lines and not dipping below them. So maybe we've hit an area where we can all pause, take a breath, regroup, reorganize, and start stacking, right? All right, a company that I want to talk about next is Samsara. Ticker symbol is IoT for Internet of Things. Samsara has not been public very long. We did a video on Samsara back here on the 14th of December, right before their IPO on the 15th of December. And we talked about the company and what they do and my thoughts about them, my investment thesis about them. But on Sunday's Catalyst Watch video, I talked about them specifically for Monday because on Monday, the quiet period ended, meaning analysts were allowed to start their coverage on Samsara. Now, when the analysts came out, all but one gave a positive outperforming rating for Samsara. All but one. And they also gave Samsara an average price target of $30, which implies another 22.7% upside. Now, Samsara did run, well, it dipped at first from its IPO, but it went on a rally, really nice rally. And it got as high as $31, $32, 31.41, and then sold off and was under a lot of pressure because of the environment where we were in, where growth stocks were sinking, value stocks were rising, and there was a great divide between growth and value stocks. Now, growth is making a comeback. Growth is rebounding. Samsara was up 6.2% today. Yesterday, it was up 1%, 0.99%. So I'll call it 1%. But if you measure the candle wicks, yesterday, Samsara got as low as $20. And today, it got as high as $24. That's an 18.4%, if you timed it perfectly, gain in the past 2 days from bottom to top. Now, nobody has timed it perfectly, I'm sure. It's nearly impossible to time the market. But that is an 18.4% swing from the low yesterday to the high today. And it is possible, since the Fed came out in Jay Powell's hearing today in the Senate, that maybe growth can continue. But there's one big roadblock. For growth to continue this rally, and it's only been 2 days, but for growth to continue this rally, that means when inflation data is reported, it can't come in hot. But we know that's not the case. We know there is inflation. Like I said at the beginning, we don't need a report to tell us that prices are higher. We know they are. We can feel it in our pocketbooks. Our wallets feel lighter after going to the grocery store just to get the essentials. So this inflation data, when it comes out, could put a pause on growth and swing it back to value. It's a real possibility. And that's one of the main reasons why we put our top 10 list together. So when these swings occur, you know what the best growth stocks are to be in. Samsara was one. And when it swings to value, you know what the best value stocks are. It's the whole reason we did it. Our goal is financial freedom for everyone. And whatever we can do to facilitate that and reach that goal, financial freedom, that's what we're going to do. That's our focus. That's our guiding light, our principle, our main tenet. Financial freedom. All right, let's get off of Samsara and let's go down a few deep dives, starting with SHAK. Now, SHAK is an interesting one. I almost talked about them on the Catalyst Watch video. I was right there. I was about ready to put it on there, but I didn't want it to be too long. When those Catalyst Watch videos that come out every Sunday, most important video I do all week long, I don't want it to be an hour, 2 hour long video. So I do have to cut things out that maybe I would rather put in just for time's sake. But SHAK, ticker symbol is SHAK. SHAK. Now they're a burger joint, right? Got lovely shakes. Now, if you look here, they have been in a range since the beginning of December with a bottom around $68 and a top around $74. But they've also been in a descending triangle. Okay. Now, they were in, you can look at it here, a symmetrical triangle a while back from May until November, hit earnings, broke out of that symmetrical triangle, nice gap up and rally. Hopefully, you were able to take advantage of that. Now we're in this other pattern, and boom, we break out of it. Gap up, see ya, leaving it behind and rallying, up 13.2% today. So why was Shake Shack up 13.2% today? Well, Shake Shack, and again, that ticker symbol is SHAK, is tasting pretty delicious today as the company appears to have closed out 2021 on a very strong note. The pricey burger chain provided robust guidance for Q4. Its results perhaps support the case that comfort food remains appealing to a lot of people as the pandemic continues. And hopefully, this pandemic is going to start to wrap up soon with the Omicron variant, I believe, helping to speed us along to an end of it. Now, Shake Shack expects Q4 revenue to come in around $203 million, nicely ahead of prior guidance of revenue of between $193 to $200 million. Even more impressively, it expects Q4 same shack sales. You get that one right. Instead of same store, same shack. Same shack stay. Now I'm getting myself tongue tied with it. Same shack sales. It's a tongue twister. To increase 20.8%, well ahead of prior guidance of an increase in the mid to high teens. Shake Shack was lapping some easy comps from the year ago quarter, Q4 2020, but comps still grew at a very respectable 2.2% versus 2019, improving from a loss of 7.3% in Q3 due to strength in both urban and suburban markets. Shack Shake level operating profit margin is expected to be approximately 16% in Q4, only a slight improvement from the 15.8% in Q3, but nevertheless a very welcome one. Shake Shack has been facing higher costs for commodities like beef and chicken, as well as for wages. So, any margin improvement is positive news. The stock has been in a downtrend. It has been cut nearly in half since mid February. Even though we had even though we had that rally and gap up in November, it is still overall, it has been in a downtrend. You can see that quite well. But in mid February, it was trading near $130. Shake Shack was one of the worst hit quick service restaurant chains in connection with COVID. Its high prices, lack of a drive through, and high exposure to areas hit by the pandemic have weighed on results. Shake Shack has over 40% exposure to New York City and northern New Jersey. To counter those pressures, to sediment around the stock, investors needed this boost of good news. Shake Shack is stepping up on the gas in terms of expansion. It opened 36 new company operated, so they own them. 36 new company operated shacks in 2021, under development is targeted to accelerate to 45 to 50 openings in 2022. 45 to 50 new store openings this year. Now, one criticism of Shake Shack centers on its lack of drive-through locations. The age of COVID, if it's taught us anything, COVID has made drive-throughs and their capabilities very attractive. Going back to Jack in the Box and buying Del Taco had drive-throughs. That was a big reason for the acquisition. Drive-throughs in fast food are a must after COVID. Now, the drive-throughs and those capabilities made Shake Shack look more attractive. And missing the ability to offer drive-through service may have resulted in lost sales for Shake Shack. However, Shake Shack is now dipping its toe in the water as it just opened its first ever drive-through location. One in Maple Grove, Montana. And the other is in Lee's Summit, Missouri. Early results for those two shacks are very encouraging. And Shake Shack expects to expand its drive-through footprint in the years to come. Now, in less positive news, Shake Shack saw its operating hours drop in the last week of fiscal year 21 and the first 2 weeks of fiscal year 22, as a sharp increase in COVID cases had an impact on its ability to staff and keep restaurants fully operational. However, this does seem like it will have more of an impact in Q1 rather than Q4. The company should provide more color on this when it reports full Q4 results in late February. Overall, this strong guidance, especially the robust comp guidance, is welcome news for investors. The price of this burger chain's shares have been walloped over the past year. It is particularly discouraging because McDonald's, ticker symbol MCD, has performed very well. I think Shake Shack's higher price point is hurting it during shaky economic times. And of course, the lack of drive-through locations may be taking a toll during COVID. I would remain cautious buying down at these levels. This breakout today could easily fall back into the range that it's been in over the past month. Let me zoom in on this so we can get a better look at this. And I'm going to open the volume back up on this too. So average volume is 874,000. That was the average. It hit 3.9 million today. So almost a threefold increase in volume, specifically on the news today. Now, if we go back looking at volume over the past 1-2 quarters, it has been relatively the same. Looking at it, it looks like maybe 600,000 is the average volume over the past 2 quarters. If we go back 3 quarters, there's a little more volatility because of this choppy rally that it was in. But in the downtrend, and even the choppiness in this last descending triangle, still the average volume is 600,000, 700,000. It looks like it's getting up to here. So somewhere between 600 and 700,000 on volume. But today it gets to 3.99 million. Big volume. I could see a big sell-off coming in this too. So don't buy at today's price. As far as an entry point, what I would do is I would set a stock alert somewhere around $74, $75. That way, you know when it's crossing that line that, hey, this thing has just fallen back into its range. It's at the top of that range, but it is still within that same range. And then watch it, okay? Is it in a short-term downtrend, maybe heading to the bottom of its range? But at least that will alert you that the stock is now back in its range that it's been in for over a month now. And then maybe this thing comes back down to the bottom of its range. It sits there. And then maybe as we're getting closer to earnings, maybe it starts to rise a bit as people start anticipating the good news they heard today and start pricing it into their earnings. That is a possibility. I believe there's a good probability of it following that path. Okay, so you got Shake Shack there. Good entry point for me would be at the bottom of this range, so under $70. Really, if you could get down to 65, that would be better. I know that's out of this range. The range is about 68. But if you could get to 65 with a long-term view on Shake Shack, then I think there could be a good risk reward at that point. As long as Shake Shack can follow its path of opening more drive-through restaurants. Having that drive-through is so critical. And having a drive-through, not just for a drive-through, not just to have one, but it's got to be an efficient drive-through. So you can service as many customers as possible. Think of McDonald's for that. How quickly they can get customers in and out of a drive-through. It's remarkable at some point when you think about it. Okay, so there's Shake Shack, entry point, bottom of this range, under 70. Really, if you get into 65s, that would be much better. But this has to be a long-term hold, unless you're going to try to maybe swing trade it once it gets to the bottom of its range. Swing trade it going to the top of its range. That's a possible trading strategy that you could use. Okay, let's talk about CVS Health. Ticker symbol is CVS. Let that load there. Okay. CVS Health. Look at this, man. Look at this rally this thing has been on. It was up about 1% today. So not a lot of gain. And it is flat, literally flat in after hours. Hasn't changed a penny. Now, It did reach a 52-week high today, $107.26. Once it reached that top, there was some selling pressure on the stock. But it's this past 2 months, it has been rallying nicely. It was in a trading range there for a while. As a matter of fact, we could mark out this trading range, and it would probably be somewhere at about $80 as the floor, and the ceiling looks like somewhere between 87 and $88. So I'm going to go with 87.50 just to mark off the line. And that helps you to see that range that it was in there for about 4 months or so. So we had a rally, then it went range bound for about 4 months, maybe 6 months. And then we had this other rally, right? And when it did its pullback here, it came down to that 50-day moving average. And I talk about it frequently, bullish above, bearish below. It bounced off of that nicely and continued rallying. So why am I talking about CVS today? Why am I bringing up CVS Health today? Well, as illustrated by a near 40% year-over-year gain in its stock, CVS Health, ticker symbol CVS, has emerged as the clear leader in the pharmacy market, outperforming competitors Walgreens Boots Alliance, ticker symbol WBA. We talked about them earlier. And Rite Aid, ticker symbol RAD. That strength is on display again after the company raised its fiscal year 21 EPS guidance for the second time in a month, while also reaffirming its fiscal year 22 EPS outlook of $8.10 to $8.30 a share. Recall that on December the 9th, the company bumped its fiscal year 21 EPS forecast to at least $8 a share. And that was from its prior guidance of $7.90 to $8 a share. CVS's expectations have brightened considerably in a very short amount of time, as it's now projecting EPS of $8.33 to $8.38 a share. At the center of CVS's impressive performance, which has included blowout EPS results in 6 of the past 7 quarters, is its strategy to become a more comprehensive provider of healthcare services. That's it. That's it. That's the secret right there to CVS Health, to become a more comprehensive provider of healthcare services. Now, let's take a closer look at how this transformation, along with some favorable business trends, are driving the company's enhanced growth perspectives. Up first, the emergence of the Omicron strain and an explosion in new cases is providing a major catalyst for CVS's retail LCT segment. Last quarter, COVID-19 diagnostics tests, vaccines, and over-the-counter test kits accounted for 40% of the segment's $2.27 billion increase in revenue. With Amazon, ticker symbol AMZN, and Walmart, ticker symbol WMT, bolstering their online pharmacy offerings, the writing was on the wall that traditional pharmacy companies like CVS, Walgreens, Boots Alliance, and Rite Aid would lose some ground. Rather than taking their e commerce giants head on by doubling down on its retail LTC segment, CVS has branched out into new healthcare markets, such as primary care and home health services. In fact, CVS is scaling back its brick and mortar business. Announced on November 18th, CVS had plans to close about 300 stores per year over the next 3 years to reduce store density. Meanwhile, many remaining stores are evolving into healthcare centers, complete with primary care centers and health hubs that can treat patients with more serious conditions. CVS Health, their benefits, their business, Aetna, is growing its membership base at a healthy clip, adding 187,000 new members in Q3. Furthermore, the company is launching new products such as home health services, health related subscription platforms, and the commercialization of health analytics. Health analytics, that's a segment that nobody's talking about. That is going to be a huge tailwind for companies in the healthcare sector. The smartwatch that people wear, yeah, it tells you your heart rate and other things, right? So, healthcare analytics is going to become big business. Not only will these offerings provide new revenue streams, but they should also help keep the cost of care down for the Aetna business. On a related note, there is some concern that claims related to COVID 19 treatments will apply pressure on the segment's earnings. This issue was highlighted by Humana, ticker symbol HUM, on January the 6th, when it stated that its initial fiscal year 22 adjusted EPS guidance will target to the low end of its long term growth range of 11 to 15%, as its outlook includes an explicit COVID related headwind. The main takeaway are that CVS is, what word should I use? CVS Health is capitalizing on a combination of near term COVID 19 testing vaccines and long term launch of new healthcare services and opportunities, that it is a strategy to expand and diversify its healthcare offerings. And I believe it's paying off for CVS Health. Now, this transition with healthcare analytics, just imagine how smart our smart watches are going to be. And just imagine those smart watches taking our vitals, sending them to our doctor. And AI in the cloud intercepts them, looks them over, and gives the doctor an answer or alerts the doctor to something that's going on. That is going to be big business. Now, will consumers be okay with sharing their most intimate information with a company ultimately to their doctor? Will doctors have enough trust with patients that patients will feel comfortable sending their most personal data? Your heart rate doesn't get any more intimate and personal than that on a human being. Sending a whole bunch of different data points that's happening with your body to your doctor. And AI intercepts it on the way, diagnose, goes through a diagnostics period. The AI looks at it, discovers you've got an irregular heartbeat. Let me flag that. So when the doctor then looks at your notes, they see that, oh, this was flagged. Let's look at it closer. Can you imagine the diseases, the possibilities of catching things super early? It's going to be huge. This healthcare analytics and being connected to your doctor in this way has never been done before. Sure, there are startups, there are small companies out there working on these ideas. But for me, and as most of you know, I'm diagnosed with porphyria. And for me, this would be, I understand the privacy concerns, but if my doctor can, with AI, can help solve a problem that my doctor and I don't even know about, that is a huge benefit. Okay, enough about that and the future there. But yeah, CVS is doing a really good job. They're not letting Walmart and Amazon come in and take over their turf, or like GoodRx. That's a company that definitely got hurt by Amazon coming into the pharmacy space. But uh, GoodRx, I can see a use case for them because they do provide cheaper medications. But if a GoodRx would be incorporated into a pharmacy like CVS Health, I don't know if that's a route that CVS Health would want to go down because you know, I don't know. Just a thought, an idea, just a random one that popped into my head. But that's how I always think about things. I'm always trying to connect different things together and figure out what could or could not happen, what could work, what couldn't work. Always thinking. Any entrepreneur, their mind is always thinking about how can you do something better, or how can you fix a problem. Always thinking that way. All right, so that's CVS Health. I want to go from healthcare to airlines next. All right, so we're going to talk about Delta Air, and their ticker symbol is DAL. All right, let that load. Excuse me for just a moment. Okay, with Delta Air, this is important, and not just for Delta, but this is also important for American Airlines, and that's really who I'm going to talk about. But first up, Delta Airlines, ticker symbol DAL. They report earnings before the opening bell on Thursday morning. So mark your calendar for that one. But American Airlines, ticker symbol is AAL. American Airlines set the stage for a positive fashion by lifting its Q4 21 revenue guidance after originally guiding for about a 20% decline in revenues versus Q4 2019. American Airlines now expects a drop of about 17%, penciling out to roughly $9.4 billion of revenue. Battered by the Omicron variant, which has caused thousands of flight cancellations over the past few weeks, American Airlines' brighter outlook comes at an ideal time for the besieged air industry. In particular, its improved revenue guidance puts the spotlight back on a demanding environment that has remained incredibly resilient in the face of surging virus cases. Back on December the 7th, Southwest Air, ticker symbol LUV, LUV, also raised its Q4 guidance, forecasting a top line decline of 10 to 15% compared to its prior outlook of being down 15 to 25%. Although loves, I like saying that, their ticker symbol, although their upwardly revised guidance came before this recent burst of new virus cases, American Airlines' enhanced outlook indicates that the upswing in travel demand has remained firm. However, American Airlines has not flown through this wave of new virus cases completely unscathed, and there's still plenty of turbulence to work through, including the following few items here. While leisure travel has recovered to pre pandemic levels, business travel remains sluggish. The good news, though, is that incoming CEO stated during a recent CNBC interview that he expects business travel to return to pre pandemic levels this year. Now, to me, that comes as a big surprise. I know getting out and meeting people and being face to face is a big deal. And a lot of things can come across and get lost in communication when we're texting, emailing. But at least with video chat, you get to hear and see the person. So I figured businesses would adapt more to a virtual environment and meeting with others. Number one, because it saves the company a lot of money. Number two, it keeps your team together. But if they think business travel is going to pick up this year, then maybe they know something I don't. Staff shortages and the resulting flight cancellations have cut American Airlines capacity, which is pushing the cost per available seat mile, or CASM, higher. The company now anticipates CASM to be up 13 to 14% compared to its previous forecast of 8 to 10%. Rising fuel costs pose another risk to pre tax margins, especially if geopolitical tensions escalate. The possibility reintroduction of new air travel and the restrictions that that could bring and or possible lockdown measures from governments could provide a headwind for the airline industry. When asked about the future general impact of Omicron during an interview last week with CEO, he stated, quote, "I don't know how it's going to play out. The one certainty of COVID and the pandemic is that there's a lot of uncertainty." End quote. Overall, American Airlines is effectively navigating through the impact of the Omicron variant, as evidenced by its improved Q4 pre tax margin guidance of 12 to 13% versus its previous outlook of 16 to 18%. Leisure travel demand, in particular, has remained strong, and flight cancellations appear to be slowing across the industry. There are all, or I should say, all of these are favorable data points, but uncertainties still they're still out there for American Airlines and the airline industry and its peers as we close in on 2 years of dealing with the virus. So, as I take this back to the beginning, with Delta reporting earnings Thursday morning, could the good news from American Airlines be helping Delta or hurting Delta? I think the ultimate way of looking at it is that the good news and the good news from Southwest together are helping, or at least raising our expectations that Delta is going to do better than previously thought. But you let me know. What do you think? What do you think is going to happen on Thursday morning with Delta's earnings? Okay. All right. To wrap this up, I want to talk about Catalyst Watch for tomorrow. Oh boy, tomorrow. We get a read on inflation with the latest CPI data. We are bracing for another historically red hot reading on inflation. On a year over year basis, consumer prices are likely to surge by 7.1% in December. That's a jump from November's 6.8% year over year reading. This would make December the fastest rate climb since 1982, when CPI rose as much as 8.4% on a year over year basis. That is big inflation. And like I said at the very beginning of this live stream, we do not need a report to tell us that inflation is bad. We all feel it. We go to the grocery store, we feel it. We go to the gas station, we feel it. We go to the hardware store to fix a door that hinge has fallen off, we feel it. We go to buy the basic necessities and we feel it. The money in our account is shrinking. This is the silent tax that gets us all: inflation. Now, on a month over month basis, and that's what we should really, as investors, be focusing on, is the month over month. The consumer prices are expected to rise by 0.4% in December. And that's slowing down from November's 0.8% rise. But still making this potentially, if it does come in at 0.4%, the 18th consecutive month of increases. So we need to keep an eye on this report when it comes out in the morning, because it will affect the market. If inflation is hot and high, say goodbye to the gains made in growth stocks over the past 2 days. And we'll switch out of growth and go to defensive or value. A lot of value are defensive. So be careful tomorrow with the inflation data coming out. Now, again, if you want to know what the top 10 stocks are in value, in growth, dividend, and momentum, then click the first link below and get instant access to our top 10 value, growth, dividend, and momentum stocks. That's over 40 because there's bonus names on each one of those lists. So that's over 40 high quality names. So if the market switches and it's dumping growth and hopping into value, then you know what value stocks are the best. If the market is leaving value and going back into growth, then you know what the best growth stocks are. And we don't just randomly go to some screener and pick out some growth and value and say, oh, yep, here's our list. No, no, no. This is a very precise method that we use, and we pretty much share that method with you. Because at the very beginning, we tell you the method that we're using, how we come up with these top 10, how we come up with these top 10 value stocks, how we come up with the top 10 dividend stocks. Now, most people, even YouTubers, if they're going to put together a dividend list for you, they're typically looking at the wrong place. They're looking for the biggest yield, the biggest payout, the biggest dividend payout. And that's missing the boat. That's not going to give you the best dividend stock. So, just want you to know it's there and you can get access to it. First link in the description. Also, KB Homes, they report earnings tomorrow. They have an estimated EPS of $1.77 on revenue of $1.71 billion. Now, supply constraints will still be a problem, no doubt. But plus side is that this is, with these supply constraints, this almost forces a condition upon KB Homes to slow down their delivery pace. And this allows for more extended revenue streams. With the stock down nearly 24%, and I should have pulled them up, KBH is their ticker symbol. With the stock down 24% from its highs from back in May, it is sitting at the bottom of its price range earlier, and then the past 2 days, it has been rising. And right now, it's about halfway up through this range here. Halfway. 2.5% gain today and a 3.3% gain yesterday. So it's running. Could it be running to the top of its range and then fall back? Or could earnings be so good that it breaks above? All right. We got a comment for Etsy. So let's go look at Etsy. Ticker symbol EST. ETSY, Etsy. All right. So it has broken down since the last time we looked at it here. It's broken out of. All right. So Etsy's been in this trading range. You can see here. It has broken out of it here. Let me get this off. There was a pattern here that it was forming, but it broke that pattern. So let's take that away. And this line here, I'm going to put it here and here. And let's see. All right, just trying to get this decline that it's been in here. And try to see if I can't find a potential channel that maybe it's been in. But let's look at this thing here. No, not. All right, not quite a pattern forming here. But all right. And let me just look over here for any upgrade downgrades for Etsy. And then we'll dive into this. All right, so it's loading for Etsy. Okay. All right, so the last bit of news for Etsy would have been on January the 7th and also on January the 6th. So on the 7th, Guggenheim lowers their Etsy target to $285 from $330. Now, that there's still upside for Etsy, even lowering their price target there. Now, they said in this note, we dive into the changing composition of Etsy's growth versus the last 2 years of pre-pandemic. We also discussed the short-term event path, which may be noisy, with Q4 potentially stronger, but Q1 guidance could be light due to the comparisons and macro risks. Before growth reaccelerates in Q2, overall, we come away constructive on the outlook and continue to view this as one of the best positioned and most attractive models in e-commerce. They believe that Etsy has hit a major inflection in its life cycle, and there are structural benefits from the last 2 years that should support higher growth in wallet share over the next few years. All right. So they trimmed the price target a bit from $330 down to $285. They think that there are multiple comparisons that might be a bit tough. Okay. All right. And then the only other one note before that um, expects upside from 2020 to continue into 2022. Etsy is our top pick for 2022 and the new conviction list name. We expect frequency retention initiatives to help support double-digit growth in GMS buyer at the core of Etsy's brand for the foreseeable future. This metric is still at a fraction compared to Poshmark at $250. Okay. Or Wayfair at $480. So out of Poshmark, Wayfair, and Etsy, they're picking Etsy. And while the House of Brands portfolio is still small, GMS today, we think Etsy and their expertise should drive sales, take rates, and ultimately profitability. We are tweaking down our Q4 21 sales GMS estimate to the midpoint of the guidance. And view recent multiple comparison. Okay. So we've got one positive and one mixed from analysts, and a price target, one at 285, and the other one didn't have a price target. Let me see here. That would be, let's see, 250. All right. So either way, analysts right now do have $250 to $285 price target on Etsy, which where it sits right now at 182. So if it goes to 250, that's a 37% upside. If it goes to 285, that's a 56% upside. And realistically, both of those price targets put Etsy back in its trading channel here. The first one obviously puts it at the bottom of the trading channel, and the second puts it towards the top of the trading channel. So both price targets from analysts do put Etsy back into its price target. Its trading channel here, and I think that's realistic. We have earnings not too far out, over a month, just over a month. Um, but the big thing with Etsy is the valuation got pretty big, and the market environment was to reset valuations. So companies that had really big valuations, I mean, look at the run Etsy went on through 2020, March 2020, all the way until the peak here, November of 2021. So a valuation reset is what investors have been going through. Now, Etsy, I think, is a strong company. I like Etsy. I think Etsy has what companies need for the future. It is online. It has got a massive community. It has got loyal customers. Um, so it has everything that a company needs to be good. What it had that was a bit rough for investors is it had a valuation that was stretched out a little too far. So this pullback, this valuation reset, I think is healthy. And if we look at where it landed right here, it came real close to this line right about $180, maybe going up to $182. That range right there. So 180 to 182. That range has acted as support several times in the past. Going back to August of 21, support. July of 21, support. Again in July, support. Again in June, support. We've got support in May. We've got support in March. And we've got support with a back test in January. So this little $2 range has really acted as pretty strong support. And it being in that range right now, to me, is significant. Now, if growth gets beat up on anymore, and I don't think growth is out of the woods yet. I think inflation is going to cause a little more pain with growth stocks. But then we're looking at potentially this $155 area right here. I'll put a line there. This is the next area where there was actual support right here in May, again in May, and over here in December of 2020, May of 2021. And you may be able to actually find a range. We could probably go up to $164. And this be the next range here. Right here. 155 up to 164. Because there you see the support here in May, and then several areas of support, like a couple weeks worth of just riding this line, the $164 line. So if there's more pain for growth, then I could see this dropping down to this next area here. But then earnings is probably would line up to where If it continued falling in this channel that it's in right now, it would probably get into this bottom channel, the 155 to 164 channel, by the time earnings rolls around, and then you could probably get your reversal potentially then, or it's going to move sideways, maybe dipping down close to the top of this range and move sideways until earnings. But earnings should give us a pretty good tell on how they are handling, or how they handled holiday shopping, and how well did that do. Because a lot of retailers have come out and talked this week. Most of them have increased their guidance, raised their guidance. Some of them have lowered their guidance or said they would come in line. But that's just a handful of retailers. Most retailers have come out and raised their guidance. So that bodes well for Etsy being online like this and being digitalized. So there's my two areas of interest on the stock chart here for Etsy. Again, it's a strong company, but if the macroeconomics takes over and growth stocks are punished, Etsy is going to be punished right along with them. I mean, even look at the switch today that was made from value stocks back to growth stocks, but Etsy still being down 0.5%. That just goes to show how much the valuation for Etsy got away from itself, and it really needs to have this valuation reset and come on back down, so that way when earnings come out, it can grow too. So there's my thoughts on Etsy. My two price areas here. If it did get down and break $60, that to me is a great entry point. If it got down to, the $55 to $60 area, that is an excellent entry point in my opinion. So what I would do is set a stock alert, get it someplace high, so that way you can watch it. Maybe get a stock alert starting at $175, so that way you can watch its behavior. If it's barely moving, going sideways, down, up, whatever it may be doing, maybe put a couple stock alerts, one at 175, so you can see that, oh, yep, it is moving lower. Get another one down here at 164. Oh, it's now broken into the target area where I want to watch to pick up shares, and just do that. And don't try to open a full position all at once. Dollar cost average your way into it is the best thing. And never ever do a market order. Always do a limit order. It may sound silly, but when you do a market order, you do not have complete control over the price. It may be $158.01 on your stock app, however you purchase the stock. But then you look at it and you got it for $159.60 a share, but it's at $158.01. That's the problem with a market order. That's why you do limit orders, because then whatever price you set, $158.01, your limit order will not go through until that price is met. And then the second thing, don't forget to set a trailing stop loss, or if you're trading, if you're investing for the longer term, then make sure to set a stop loss and give yourself some wiggle room. Maybe make it as much as 10%, so you have some room for the stock to breathe. Make sure you do those two things. Once it gets to your entry point, you're ready to buy. Don't open a full position at once. Dollar cost average in, either maybe on its way down, maybe it breaks 165 and you're going to dollar cost average down to whatever its low is going to end up being. That way you're lowering your cost basis as it's going down. And then set a limit order to buy and a stop loss for investing, or a trailing stop loss if you are trading. Please remember to do those things. Okay, VVS Finance is next to blow. VVS Finance. I get the Van Eric Semiconductor. VVS. I don't see a ticker here for VVS Finance is next to blow. If you want to come back with help me out here with that ticker symbol, that would be great, because I do not see a VVS. WVS. I've got a WVS Financial Corp. It definitely doesn't have much volume, and very spotty here. Very spotty. And the reason there's so many holes in this thing is because it doesn't move often, but when it moves, and it doesn't take much volume to move it either. I don't know if this is who you meant or not there, Jay. Just taking a guess there. Up 2.8% on the year so far, which is good. Financials should do good. Regional financial, I think, is going to do the best. Profit margin has been coming down over the years a little bit. On a quarterly basis, same thing here. Profit margin was at a high of 23.4% a year ago, but has dropped now to 18.6. Net income has also dropped down. All right. Well, I don't know if this is the one you meant or not, and I don't see a correction in the comment. So I'll go ahead and wrap things up here. Let's just check into Bitcoin before I do right quick and see where it's at. 42,667. So it is still holding above that trend line. All right, cool. Well, I'll wrap things up here. I will see you guys later on. We're here every day around 5 p.m. for the after hour show to talk about the market, stocks, but most importantly, answer your questions. So I'll see you guys then. Thank you so very much for joining me today. I greatly appreciate it. I love the communication, the comments, the questions. That's my favorite part of doing this. So thank you guys so very much for watching, and I will see you in the next video.